All right, let's get you to the numbers now. Find out where markets are trading here on the floor of the New York Stock Exchange. The Dow Industrials, call it the high of the session, up about 80 points. The S&P 500 up 0.6%, and the Nasdaq, we'll call it up about 0.5%. So for a trader's take on what's happening on this quadruple rich, meaning we got a lot of options and futures expiring today, Kenny Polcari, this is your kind of day, right? And here's why I say this. Confidence, weaker than expected. Empire Manufacturing, weaker than expected. Factory utilization, weaker than expected. And we're up.
Right. And there's this nervousness. You can almost feel this nervousness going into the weekend. They're not even concentrating really on the U.S. macro data, right? Because everyone is so preoccupied, not only about the elections in Greece, but listen, understand, there's those elections in France, which no one's really talking about in Parliament. There's that whole election in Egypt, which no one is really talking about.
Or should we say lack thereof in Egypt? That's part of the problem. Will it really be a free election?
Well, okay, and so therefore, all these things come together on the world stage is going to create for really a very, very interesting and potentially volatile weekend.
Yeah, so what's the trade then?
Well, I think the trade today is going to be very nervous. I think what you're going to do, your market's up here on certainly this continued talk about all these central banks around the world that are just ready to flood the system because the last thing they want is this Lehman-type event. But don't forget, the last time when we had that Lehman event, no one really understood the depth of it, and so that's why we had this violent reaction. We've been talking about this Greece, potential problem in Greece now for months, and so everyone's really kind of semi-well prepared. And the central banks yesterday came out and said, listen, don't anyone panic because we're ready to flood the system. So it's going to be very interesting to see what the reaction is on Monday. It may not be as violent as it potentially could have been.
All right, let's bring a couple other opinions in here. We're going out to Chicago, the Chicago Twins. We got Bob Iacchino of TraderOutlook.com. He's watching the bonds. Also, Brian Battle, Performance Trust Capital Partners on the currency trade. Hey, I'll tell you what, Brian, start us off with currencies because we got the euro kind of hanging in there on some pretty concerning headlines.
Yeah, you're right. The macro means nothing. It's all about the headlines. It's cat sleeps with dogs. The euro has getting a bid here right before a massive election. And you're right. The worst possible news ever, if the socialists take over Greece and the young kid gets in charge and they disavow the euro, could be a stock market rally because all the central banks are going to put a put in the market and flood the market with currency. So today's trade is going to be get flat and get out of the way.
Yeah, Kenny Polcari nodding with me as you're saying absolutely that. Hey, Bob Iacchino, in the bonds, we're seeing money move into the 10-year again, right? It's the safe haven trade. How low could the yield go on the 10-year?
Well, I think it could go another 25 basis points if there's a seminal event over the weekend. The thing about it is I'm looking more at the German yields than I am at the U.S. yields because German yields collapsing like they have over the last day or so is really a play on the breakup of the euro and an appreciating Deutschmark if the euro just exploded. But, to Kenny's point, I think I'm going to be the first trader to say that I don't know what the trade is, and I'm going home after this. Because I'm trying to look back to the last time that we had a monetary union explode over the weekend, and I just can't find it, so I'm going home. As soon as we're done here, I'm going home.
Take the money off the table. Kenny Polcari, you're on that same page. Hey, Brian, what? You just kind of stepping aside on this one?
Yeah, that's a really great advice. I mean, even the 10-year, the Treasury market, we had a 3s, 10s, and 30s, giant auctions in the Treasury market, and the 10-year and the 30-year set record lows in yields. So there's no confidence about what's going on. Treasury yields are indicating also a flight to the dollar. If you can't just hold dollars, so you buy Treasury bonds as a proxy for the currency. So I think you just get out of the way. You can't tell. You might miss a trade, but you won't blow up.
But listen, if you're a trader, and like we've all said, if you're a trader, why would you want to make a bet unless you've got real inside information that's telling you what the answer is going to be? Why would you want to place a bet and be on the wrong side of any trade come Monday morning?
All right.
You wouldn't.
So there you have it.
That is a critical point. I'm sorry to jump in like that, but it's a critical point to say that this is not risk-adjusted returns.
Right.
Even if you make money on this play over the weekend, the risk is so massive that your risk-adjusted returns are horrendous.
Yeah.
Right.
All right,
you can
guys,
measure interest rate risk.
I think we got a consensus
You measure credit risk.
We got a consensus here. We got a stock trader, Kenny Polcari, who says he's stepping out. We got Brian Battle on the bonds, who's stepping out. Bob Iacchino on the currency, stepping out. I think we're stepping out, guys. All right, thanks for being here and putting a little color on this thing. All right, Mike McKee on the ground.